March 26th, 2024. Today we had an outside down day, and when you have an outside day, generally about a 70% chance that you're going to close in the lower third of said outside down day. So here's the full range of the day. You can see we in fact closed in the lower third. So 70% chance when you go outside down, what I mean is you go above the prior day's high and then below the prior day's low. 70% chance that you're going to get a close in the lower third. And obviously the opposite is true. It's outside up. Buyers, let's say we went below here and then reversed up to the top, 70% chance you can close in the upper third. The market a lot of times gets into moods, and it does, similar things on the open throughout the week, especially when it starts early in the week. You can see here we got a lower low double bottom, and it was also an expanding triangle. This is so slow. There we go. And today we got a lower low double bottom, bars 1 and bar 3. That was also an expanding triangle. So you can see the market tends to do, it's similar or the opposite, right? Because in yesterday, you can see we got a failed breakout to the upside of the 18-bar range, and we tried to get a reversal to the downside. Today, we got a failed breakout to the downside of the 18-bar range, and we tried to get a reversal to the upside. So the market tends to like to do the same types of things throughout the week. And don't be super surprised if at some point, probably not tomorrow. It doesn't usually do things 3 days in a row, but maybe on Thursday or Friday or whatever, we get another lower low double bottom or something like that. Bar 1, a bull bar with big tail on the bottom and big tail on the tops, so really not all that great. I wouldn't do anything. An inside bar on bar 2, but a big tail on the bottom. I think a lot better to just be flat at this point. Lower low double bottom on bar 3. It's a potential low of the day. Bulls essentially betting on disappointed bears, from 2 failed breakouts of the prior day's high, and they want to see a big rally, but I'd rather see the follow through. And you get disappointing follow through on bar 4. Generally, when you get a lower low double bottom, you're going to have to get a higher low before you go anywhere. So you can see lower low, and then we got the higher low here, and then we rallied. So lower low, and then we got the higher low here before the rally. So bad follow through 4. Some bulls, they bought above 3, hoping for, a 2-point scalp. Got disappointed 4, and they exit around break even during 5, and that causes the sell off. But just, bulls, they see the big gap up, and they see this as 1, pullback 2, and 2 legs down, a 2-legged correction. So bar 6 is their high 2. Triggered on 5, so bar 6 is technically the entry bar for them. Bears are hoping that this was the start. We were going to keep getting lower highs and eventually a big sell-off, but obviously it does not end up happening. Follow through on 7 for the bulls, but it's relatively mediocre. The high 2, 5 triggers during 6, but the follow through on 7, really not all that great. If you bought above 6, you wanted to see another bar that looked like 6 or a little bit bigger, and instead you got a bar with a big tail on the top and tail on the bottom, not as good as it could be. Failed breakout above the high of the day on bar 8, so potentially sellers up here, but I wouldn't sell below 8. It is a higher high double top, but again, I think that this is strong enough for its own second leg, so probably better to stay flat. And you can see 9 tests all the way down to what? The 5 close, right? 5 wasn't a great bar, but it was a big bear bar closing near its low. So it's possible that some bears sold this close knowing they were going to have to scale in. And they did that, and when you get back to that big bear close on 9, those bears who did that and scaled in are disappointed, and they're going to be buying back shorts. So a lot of bulls willing to take this buy right here. Additionally, during bar 9 collapsed in the first probably 60 seconds and touched this close right here. So when it was sitting right here, we were about a little over a minute into the bar. You got to be thinking, what's more likely, that we just end up with a giant bear bar closing near its low somewhere down here, or that we end up with, basically getting bought back up to the 8 low? It's probably a little more likely when you get bought back up to the 8 low. And even if we don't get bought up to the 8 low, if you buy somewhere down here and then the bar ends up closing basically on its low, let's say it just closes here, it just, it goes down here in the first minute and it kind of just stalls around, doesn't really do anything, and then closes here. You can just still get out pretty much break even. There's not a lot of risk to this trade. You know what I mean? You can have a stop, probably. I don't know. I'm making things up, by the way. I didn't take this trade, but I saw it and I was thinking about how I would have managed it. And I'm not sure where my stop would have been. Maybe, I suppose, a couple points below the low of the day, maybe somewhere down here. But my point being, I don't think it's going to close down here. It's probably going to close somewhere in the middle, and then you can just get out with a small profit. But it's just a low probability that you're going to continue to sell off for 4 minutes. 9 is a double bottom, but it's a third push up. 3, 7, 9. I think the buy was down here. It's not up here. This is where the sell zone is, so probably sellers not too far above 9. You can see during 10, disappointment. Big tail, failed breakout of the high of the day, failed breakout above bar 8. So not as good as it could be. 11, an inside bar. I would probably do nothing here. Again, I think that, we're probably always in long, but it's a trading range. So right as it always goes always in long, we start to sell off. Right as it goes always in short, we start to find buyers. So a bear bar, 12, but a big tail on the bottom, disappointing. You can see there are buyers below the low of the day because expanding triangle, just like yesterday. Do you sell the close 12? No, I don't think so. You're right on the moving average, big tail. So it looks more like, just a bar to be flat. And then 13, a big tail, like I said, expanding triangle. Disappointment for the bears. This was another one of those bars that was closing somewhere down here, a minute or two into the bar. And you have to be thinking we're probably going to get a disappointing close. And that's exactly what happened on 13. 14 traded back down to the breakout point and found buyers. I wouldn't buy above 13. Bulls, it's a high of 1, but, we just had a lower low, so probably you need to go sideways. Bears are hoping this is a pullback in their bear trend, but, they don't have much of a bear trend. They need a much better follow through. Whoops. 16 is a double bottom with 14, but really not that good. Big tails on the bottoms of both, tails on the top. 17, a bull bar closing near its high. Good for the bulls, but look where you are. You're buying at the top of basically a 4 or 5 bar tight trading range. So it's really not that good. Additionally, if you're buying here, the bulls who bought below, bar 11, bar 10, they're still trapped. They haven't gotten out yet. And so you have to be wondering, if you bought below this bar or below this bar and it came all the way down here, are you disappointed? Probably. Those traders might have scaled in at the new low of the day. They probably did if they're, no profitable trader is buying below here and not scaling in below here. Let's put it that way. But, are you really going to buy above 19 when you're buying right smack in the middle of this trading range at the top of the tight trading range, right where other traders are going to be selling? Probably not. So it's really not that good. And you get kind of disappointing follow through on 18. It is a bull bar, but you wanted a big bull bar closing near its high and you didn't get it. 19, reversal bar. It's a low too short for the bears, but really not that good. It's an inside bar on 20, so 1920 is an II pattern, breakout mode, but we were already in breakout mode, so it's not all that surprising. 21, outside down. I wouldn't do anything above 20. I think that it's 3 pushes up, 14, 17, 18, and then 20. So I would rather just sit and do nothing at that point. Look to trade the breakout or some sort of breakout failure. Outside bar 21, inside bar 22, so it's an IOI pattern, but it's an IIOI. It starts to become meaningless in here because this is just a tight trading range. So it's better to just do nothing is the point in here. And you're getting lots of failed breakouts to the upside and the downside. You can see we have a wedge 15, 18, 24. So what does that mean? Probably 2 legs sideways to down, and then the market will decide what to do. So you can see 25, really not great follow through, but a bear bar. Another bear close on 26, but you haven't really made anything. You made maybe 1 tick if you sold below 24, so it's not that good. Pause bar on 27, essentially a doji bar, and then 28 could be argued as a second leg down. So first leg, pull back, second leg. And then you get a big bull surprise on 29. But you don't want to buy 29. What do the bulls have going for them? Well, we broke out above the high of 24, which is actually really important that we closed above this high. It is a wedge, 15, 18, 24, but it's still, it was still okay for the bulls. But what do you want to see? You want to see a big follow-through bar. We haven't had follow-through all day yet today, so we're probably not going to get it now. And if you're buying right at the 12 high, which is the top of the sell climax, which is always a magnet for trading range days. Bulls more interested in buying a pullback. You can see they weren't filled quite at 50%. They were eager to buy, hoping to get a bull close and that we were going to start to rally. But instead, they got a disappointing doji bar on 30. So disappointment 30, and then you get outside down 31. If 30 had closed on its low, it was a credible trap. Betting the breakout had failed, and you could have sold. If 31 wasn't so big, you probably could have sold that. But again, now it's just a huge bar with a tail on the bottom. And it is still a failed breakout above the wedge, but it's harder to want to take a short like this. Follow through on 32, but a big tail on 32 low, not that great. And the doji bar 33, I think it's really hard to be holding short here. Outside down 34, good for the bears. But really, again, none of this is ideal. Follow through 35, but again, big tails, doji bars, and this is the problem. Big reversal up 36. You have to exit above 36. Bears sell the close, they don't let it trigger, 37. Disappointing follow through doji 38. Bear bar 39, a couple pushes down, but again, this is just not that good. 40, outside up, but a big tail on the top and the bottom. 41, again, big tails, top and bottom 41. This is just really sideways price action. At this point in the day, you're starting to think it's looking a lot like yesterday, which is true. And you can see it's been mirroring a lot of the things that yesterday was doing, right? The lower low double bottom, the lower low double bottom, failed breakout of the 18 bar range. We're starting to drift down here, so you have to be aware of the failed breakout of the 18 bar range. But I thought we tried to get a sell to close finish yesterday, and we weren't able to get it. So I was thinking we might get a sell to close finish today, but it was hard to be aggressive in this area because of the way the day had gone. So a lot of people really resistant. You could have sold 69 or 70. I'll get there. But this is not as much of us. It's a surprise, but it's not as surprising as you might think because we tried to do it yesterday, but we just failed. So let's see. We're 40. We'll start with just 45 because this is just really sideways, to be honest. It's a bear channel, but it's super sideways. It's a bull flag. We're probably going to get a bounce at some point, but you don't want to buy above 45. You're buying the top of a tight trading range, 42, 43, 44, 45. So if you're buying above 45, you're buying the top of a tight trading range in an overall trading range. So that's really actually not what you want to be doing, especially considering you're buying right at the moving average and you're buying pretty much right around the midpoint of the day. Not that close, I suppose, but relatively close. Outside down 46, but you're not going to sell that. They're hoping it's a failed breakout to the upside. We're going to get a breakout to the downside of the wedge, but let's see the follow through. 47, follow through for the bears, but it's bare minimum. And then 48, the second reversal up. But it's not low enough in the range. I want to buy a reversal up from lower and like a failed breakout of some kind. To me, this is still buying the middle of the range. And then a bull bar is follow through 49, but you're buying at the same price you did for 45. So if you're buying above this, the bulls who bought one tick above 45, how do you think they feel about this? They scaled in lower. They're disappointed. So what they're going to do is they're going to sell where their longs up here. And that's exactly what happened, causing 50. And then 51, a follow through bar. If you're buying up here, you need to have a really wide stop. I don't think a stop below the low of the day is appropriate. You probably need to have a stop, a measured move down of the trading range, maybe somewhere down here, or maybe like a point below that or something. So you need to have a wide stop and probably be buying more here instead of selling under your longs. But anyways, 50, 51, follow through for the bears, but a big tail on 50. And 50, this is just not good follow through for the bears. It's not what they want to see. A doji bar, 52, failed breakout of the 18 bar range. It's a wedge, 1, 13, 52, but it's a bear bar. So let's see what we get. And you get a bull bar in 53. I think 53 is a credible buy. You know that we're in a trading range day. So what does that mean? It means the midpoint of the day is a magnet. It means that the bulls who bought the close of 49, it wasn't a good buy, but it was a theoretically reasonable thing if you're willing to scale in. So we're probably going to get back to that 49 high. And if you look, the 49 high, it's basically right at the middle of the day. And that's where we went to here. This whole rally was a vacuum test of the middle of the day. And vacuum test is strong wording there. It's a wedge bull channel of the middle of the day. But that's what we ended up getting. You get bad follow through 54. I still think probably wide stop if you're buying above 53. We shouldn't go much lower, so probably just a measured move down of 52, 53 is fine because, this is a trading range. If you're buying here, you're betting on a trading range, and we are in a trading range. We might fall a little bit below here, but we really shouldn't go far below if this is still a trading range since bulls should be finding value to buy down here. So when you get disappointment 54, a lot of bulls ended up buying basically the open of bar 55 and didn't let 54 trigger. 54 triggered, it was a low one sell, but really not all that good, so low in the range, probably buyers below. Bull bar 55, put a tail on the top, and the follow through 56, less than ideal. You can see essentially tested the 48 close. 57 is a high one for the bulls. It's a couple legs up, 1, 2, 3. I don't think bulls have to exit below 56 if they're long. My logic for that was that, the bull channel was pretty tight, and we were in a 5 bull bar micro channel, or 5 bar bull micro channel. So 52, 53, 54, 55, 56. We haven't traded below another bar. 52 through 56 is pretty tight. And I thought, the open of the day was going to be a magnet since it was a trading range day. And additionally, I was looking at the 29 close. I thought that the bulls who bought up here, they had a quick chance to get out, but I thought they might get another one. So I wasn't going to be surprised if we got up here. We probably 80% chance we got to the midpoint of that and another buy. And you can see if you bought the close of 29, you bought more above, 53. That's basically exactly where this is. So there was a lot of reasons for us to sell off over here. But I thought reasonable to be long above 53, and you don't have to exit below 56 because you're probably still going to get another leg up. 57, disappointing follow through for the bears who sold below 56, and you do get follow through on 58, but sellers above the high. A lot of bulls scalping with 2 points. You can see during causing 57 or 56. You can see if you sold, you can't sell below 56 and put a stop above it because that's just dumb. It's a low one, and that low ones usually lead to deeper pullbacks. So if you're selling below this, you need to be willing to sell more above it. And look what happens, right? You sell below 57, one tick below. It's not a good trade, but some traders take it. They sell more above the bar, and then 59 gets right back to their entry price, and they sell it along during 59, and that causes the bounce. So if you're going to take trades that are like low ones and high ones in trading ranges, you have to be aware that a lot of times they're going to lead to deeper pullbacks, and you're going to have to sit through a pullback with a wide stop in trading ranges, that is. So that was 59. Basically a high one buy above 59. You're in a tight bull channel, but you're a couple legs up, and you're touching the top of the most recent sell climax, where there'll probably be some sellers. And the 49 close, obviously a magnet as well. So potentially a lot of sellers here with how many reversals and how much overlap there is. So bulls looking to get out high. A lot of bulls end up selling out, and we get the big bear bar closing near its low 61. Can you sell 61? I think so. 62. Can you sell 62? Yes, I think 62 is a credible sell. Looking for good follow through. And you get okay follow through on 63. It's not quite as big, but it is still follow through. And then you get a low 1 on 64, an inside bar. I would probably not sell 64. I would wait to see what 65 does. You don't get triggered anyways. It's probably not the worst sell in the world to sell below 64, but you probably, again, it's a low 1. So what do you need to be doing if you're selling 64? Are you selling 64 and then exiting above 64 or exiting on a bull bar? No, you have to sell down here and probably be adding as we're rallying here. You're expecting that if you get 62, 63, we're probably going to get a lower high. So if you do get triggered, probably a stop a couple points, a point above this is fine. But, because if we go above here, there are probably sellers there too. So again, it's problematic to sell down here. You can see why I'm saying that. Disappointment, 65. Bears, they bought back shorts. That's causing the rally. 66, a low 1 closing near its low. It's a good bar for the Bears, but I'm not selling the low 1. If you're selling low 1s, again, you probably have to have a wide stop, or you have to be in the spike phase of a bear trend, and I'm not convinced this is the spike phase. 67, kind of bad follow through. But a bear bar at the least. And then disappointment 68, a double bottom with 65. Bulls want a rally, but a big tail, not as good as it could be. And then 69 is a low 2, low 1, 66. And then you can see we got a pullback in a low 2, 69. Might trap some traders out. 69 is probably an okay sell, or you could wait for follow through on 70. I think those are both reasonable sells. I thought 70 was probably better. Because if you're taking, it's just hard to take chances on days like this. I missed pretty much this whole sell to close thing because I was just so resistant to trading this late in the day. I thought we might try to do something. I thought it was pretty reasonable that we were going to try and get some sort of move, but I was just getting really resistant to trading this late in the day. I made barely anything today, and I just didn't want to end up giving it back and then ending the day with a loss when I've had barely anything that I made. And then you get outside down 72, and I think 72 is interesting math because usually when you get a lot of times when you get these really small days, you end up getting measured moves of the days. And so what I mean by that is, a lot of times it's small all day, and then you'll try to get a breakout and then try to essentially double the size of the daily range within, the closing 30 minutes. And it doesn't happen all that often that you get these days. And when you do, it's a little bit less often that you end up getting, this type of move. But you can see we do end up getting the measured move, obviously. It did initially bounce when we hit it, but what about 72, right? So if you're staring at 72 and it's finished forming and it's sitting right here, which by the way, initially bounced at yesterday's close. So that was the initial target. Do you sell the close of 72? Well, if you sell the close of 72, what are you going for? Well, you're going for that measured move. Everybody knows we're going to go try and hit the measured move. I'm sorry that I say everybody knows. It used to upset me when Al would say that a lot in the trading room. Because he'd say things, he'd say, everyone knows. And I'd say, well, I actually had no idea that that's what you're going to say. So maybe not everybody knows. But it's just an expression, to think about what most traders are probably thinking about at this time. So most traders right now are probably thinking that you're going to get a measured move down of the opening range. And if you sell the close of 72 and put a stop above 72, you essentially have exactly 2 to 1, right? You sell the close, you put a stop above, you have exactly 2 to 1 of your risk reward to get to the measured move. So you need at least a 40% chance that we're going here. And I'd say there's at least a 40% chance, if not better, that we're going to end up getting that measured move. So I thought that this was a reasonable sell to close bear trend, and you could sell to close 72 looking for follow through with a good equation. That's why you get it 73. An inside bar 74, you could sell 74, but I think that relatively low in the range at this point. It's an inside bar, so low risk. It's hard to sell. You probably have to have a wider stop If you do sell and you have a stop above, you get stopped out. This went up first, and then as it goes outside down, you can probably sell as it goes outside down with a stop above to reduce risk. A lot of traders do that, causing 75, and you can see we just ended up going sideways, and we came right back to the bottom of that measured move. So I thought, something close to 72 was an interesting trade. For stop orders today, I didn't like anything in here. I thought you could buy 53, but it's probably minor because this channel is kind of tight and it's trading range day. So, if you're buying here and you're thinking, well, we might get back to the open of the day, maybe we'll even get back up here if I'm lucky. That you're probably right about that, but you also have to be thinking, well, there's, it's a trading range day. Are we going to rally right there? Or are we going to grind our way up there and probably stop you out? Probably going to grind your way up and stop you out. You could probably sell below 62 if you wanted to, and maybe 69, but I thought 70 was better. Kind of like over here, you could sell this, but that was better. And then you could probably sell the close to 72 or 73. And you could probably sell below here or here. These are all sell the close bars because it's a big bear trend. But yeah, on the daily chart, I think tomorrow it's very possible we close the gap with this high. So what bulls want, they see this spike, they see one pullback, two, so they see a two-legged correction, and they want to start a bounce here. But I think more likely we're going to end up going sideways to down a little bit more. We might have to get to this high, and this bear channel is pretty tight. So it's very possible that we form a high 2 tomorrow. But I think overall, just expect relatively sideways trading. And I would pay a lot of attention to this price. If we get to this price tomorrow, it's going to be support for sure. Or obviously nothing is for sure, but I would, I would say I would bet a lot of money, but if we get here, I'm probably going to end up betting money that we're going to get a reversal. So yeah, outside down, that's pretty much it. On the weekly chart, bears want a bear close, maybe a bear inside bar, forcing always something to force always in bulls to exit, but they probably want a bigger bar than this. And yeah, that's the day.